LUCID stock, a 5.5% surge. The question we're tackling today is the sleeping giant finally waking up? Or, did it just roll over in its sleep?
And that really is the core question, isn't it? It's what's driving this entire deep dive.
We are focusing squarely on Lucid Motors, ticker LCID, which just saw this sudden, pretty significant move, and it was volume-driven, which has kind of reset the entire conversation around the stock.
It really has.
We're talking about a close-up nearly 5.5% at $11.15. I mean, after months of just painful downward pressure, that looks like a massive green flash on the radar.
It's a huge flash. And that move is exactly why we dove into this recent comprehensive analysis report that focuses on this exact turning point.
Okay, so what's the mission for our listeners?
The mission for you is to move past that headline number, that 5.5%, and really unpack the arguments. We need to answer that fundamental question. Is this just a dead cat bounce?
A temporary spike before the pain comes back.
Exactly. Or is this the start? Is this truly the start of that massive multi-year recovery rally that Lucid bulls have, well, been praying for?
And the report lays out a roadmap for that argument, right?
It does. It focuses on three interlocking pieces. First, the technical price action, what happened on the chart that signaled the bottom was forming.
Okay.
Second, the critical long-term growth catalyst, and this is centered squarely on the 2026 timeline.
Right.
And then finally, the unique financial safety net that, frankly, protects Lucid from what many are calling the EV winter.
Exactly. So we've synthesized everything for you. Let's start with the immediate action because, well, to understand why a 5.5% jump is so significant, you have to remember the context.
Oh, absolutely. The context is everything here.
This stock has been brutalized. I'm beaten down consistently from its 52-week high, which was flirting with $36.
$36.
Yeah.
It's hard to even remember that.
It fell month after month until it was just trapped firmly in that $10 range. And the question for everyone has been, when does it stop? Where is the floor?
And that descent is crucial because the analysis, it pinpoints the exact moment that descent stopped. The most critical technical level mentioned is the $10.50 floor.
$10.50.
$10.50. Despite all the market challenges, the bad news in the sector, the short seller pressure, the stock just absolutely refused to close below it.
It's like the market was testing that foundation with everything it had, and the foundation just held firm.
Precisely. And that refusal to break below 1050, it signals to technical traders that there is definite buying, interest-heavy support just sitting right there.
So it's not just an arbitrary number.
Not at all. It suggests a technical bottom has been established. Now, couple that with the recent jump to 11.15 cents. The analysis really emphasized that this wasn't just, short covering noise. This was volume-driven buying.
Okay, so break that down for us. When you hear volume-driven buying, why is that more credible than just a sudden spike?
It's a great question. It indicates that serious committed capital is entering the market.
So big money.
Big money. Often institutional investors. They're taking substantial positions, not just fleeting day trades. If the move up is on high volume, it gives the rally legs. It suggests conviction in that new price level.
And that brings us to the psychology of it all, which I find fascinating here. For months, it's been nothing but bearish news, right? Production misses, pricing pressure, sector skepticism.
Right. All of it.
And yet, the stock stops going down.
This is the classic indicator the analysis points to. It means the market has already priced in all that fear.
Okay.
Think about it. If the stock refuses to fall below 1050, even when more bad news drops, it suggests that everyone who wanted to sell has already sold. The downside risk is perceived as minimal.
So the sellers are exhausted.
They're exhausted. And now the market is no longer pricing in the past, it's starting to price in the future.
So now that the stock has reclaimed that psychological $11 mark, what's the immediate battleground? What's the next test?
The analysis identifies the next immediate resistance level as $12.50.
Okay, $12.50.
That is the short-term hurdle. If Lucid can break through that level, we move into a completely different dynamic. This is where things could get interesting because it could trigger a short squeeze.
We hear short squeeze thrown around a lot. For clarity, just walk us through how that mechanical reaction amplifies the price movement.
Sure. A short is basically a bet that the price is going to fall.
Right.
So when the price rises unexpectedly, those short sellers start losing money fast. If the price rises past a certain point, like say this $12.50 mark, those shorts are forced to buy the stock back to close their position and cut their losses.
They have to buy to get out of their losing bet.
Exactly. And that forced buying, combined with the underlying investor demand, it creates this rapid feedback loop. It can send the price much higher, much faster than usual. Breaking $12.50 turns a steady recovery into a potential explosion.
Okay, so that's the technical spark. But we know a company isn't built on charts alone. We need to look at the engine of growth, which pivots this whole discussion to the long-term plan, the Gravity SUV.
Absolutely.
Yeah.
And while it's worth noting, the analysis did cite a positive short-term fundamental.
Okay.
Q3 revenue was up 68% year over year. So they are scaling production of the Air sedan. It's happening, albeit slowly. But let's be honest.
The Air alone isn't going to justify a massive valuation.
Not at all. It's a niche product. It's an ultra-premium sedan.
And the analysis report is crystal clear on this. The Air sedan is not the long-term game changer. The entire thesis, the key to unlocking major revenue, it all pivots on the execution of the Gravity SUV.
This is the strategic insight. The sedan market is crowded. It's smaller globally, even in the luxury EV segment.
Right.
The real money, the high volume, the high margins, they're all in the luxury SUV space. The Gravity isn't just another car for them. It's Lucid's direct play to capture a slice of that exponentially larger market.
So to justify why investors are buying now for a vehicle that's still 2 years away, why is the Gravity such a critical differentiator? What is it bringing to the table?
It's leveraging Lucid's core technology advantage, which is their superior efficiency in battery packaging. The whole bet in this analysis is that the Gravity will offer class-leading range and interior space.
The things people actually want in a big SUV.
Exactly, the practical stuff. But it'll still offer the performance pedigree of the Air. So this vehicle, it targets a far wider demographic and, crucially, commands better pricing than their existing sedan.
Okay, but here's where I have to push back a bit. Play the skeptic for our listeners.
Please do.
Hasn't Lucid struggled with, well, pretty much every previous production target? Why should anyone believe the 2026 timeline for the Gravity will be any different? We're talking about manufacturing a brand new vehicle at scale. That's a lot of faith for investors to have.
That is a completely fair challenge. I mean, it is the core risk here. But the bullish argument, it rests on that classical Wall Street mindset. They're buying now for the probability of success, not a guarantee.
Okay.
They're looking past Q1 2024 earnings. They're betting on the revenue that will truly accelerate in late 2026 and into 2027.
Which brings us back to that old investor mantra.
It's a perfect illustration of it. The analysis cites it directly. You buy the rumor, not the news.
Yeah.
The rumor is that they have learned from the Air's production struggles, and they will execute the Gravity launch successfully. If you wait for the news, meaning you wait for the successful 2026 revenue report, the stock will already be trading far, far higher than $11.
So this recent 5.5% surge is basically investors positioning for that rumor.
That's the argument. They are banking on the company getting better at manufacturing over the next 2 years, leveraging the painful experience gained from the Air's ramp-up. It's a calculated bet on maturation.
It is, and that actually brings us seamlessly to the third point, which is the shield that allows them to even take that 2-year bet, their financial resilience.
The safety net.
We absolutely have to address the elephant in the room. The biggest bear argument against any young EV startup, and Lucid is no exception, is bankruptcy risk, the risk of running out of cash.
Right, it's the existential threat.
We've seen competitors, I think the analysis mentioned Fisker, struggle severely with liquidity just recently.
And this is where Lucid is just fundamentally different. The analysis provides a really powerful counter-argument to all those liquidity fears by detailing the massive, stabilizing presence of the Saudi Public Investment Fund, the PIF.
Now, we hear that the PIF provides billions in funding, but what does that sovereign backing truly translate to in terms of strategic advantage?
It translates into an unprecedented runway. It's a security that, frankly, their competitors can only dream of. This isn't just an emergency cash pile.
It's more than that.
It's strategic, deep-pocketed state investment. The PIF's commitment ensures that Lucid has the capital needed to survive this competitive cash-intensive period that the analysis calls the EV winter.
And it goes beyond just cash, right? They're involved in facilities, too.
Yes. Their involvement extends to co-developing facilities, like the AMP2 manufacturing plant in Saudi Arabia. This isn't just a financial transaction, it's a structural partnership. It secures production volume, geographic expansion, and it insulates them from that short-term capital market volatility.
So, while other EV companies are forced to cut R&D, raise dilutive capital, or even face insolvency, Lucid is effectively shielded. They can just ignore the noise and focus on the 2026 plan.
Precisely. That is the critical advantage. The PIF backing allows management to focus entirely on ramping up Gravity production successfully without that immediate, paralyzing pressure of quarterly solvency.
You remove the existential threat.
You remove the existential threat, and the company is free to execute its long-term strategy. That is invaluable in this industry.
So if we put these three threads together, the technical bottom at 1050, the massive revenue potential of the Gravity in 2026, and this PIF safety net, what does the report suggest is the overall verdict on the risk now?
It's all about the risk ratio. The report explicitly noted that Lucid trading at $36 was extremely risky.
Right. Price for perfection.
Exactly. A perfection that just hadn't materialized. But Lucid, at $11, with the same promising tech, a clear path to high-volume revenue with the Gravity, and that PIF safety net. It's seen as having a dramatically improved risk-reward ratio.
You're paying much less today for the exact same long-term potential.
Exactly. So if that 5.5% move was a spark, what's the confirmation signal? What should investors be watching for this week? The confirmation, according to this bullish view, is holding the $11 price level. If we can hold it through the current week.
Just consolidate there.
Yes. Consolidation meaning the stock doesn't just pull back and retest that 1050 floor. That would confirm the buying pressure has conviction. It would mean the positioning for the 2026 comeback is, as the report says, officially on a version.
And are other analysts seeing this potential too?
They are. The analysis cites that general analyst price targets are being reset in the $17 plus range.
17 plus.
That means the institutional consensus is currently that the stock is undervalued by over 50% from current levels, provided. And this is the big caveat.
Provided they execute the gravity plan.
Provided they execute the gravity plan over the next 2 years. The market is betting on the future, not the present.
This has been a really fascinating deep dive into a high-stakes, pivotal moment for Lucid. To recap the core components of this bullish narrative for you, the listener,
Go for it.
we established that the 1050 technical floor signaled a critical bottom, confirming heavy buying support.
Check.
We identified the Gravity SUV as the singular most important catalyst designed to unlock massive revenue growth starting in 2026.
The whole ball game.
And finally, we highlighted that PIF liquidity safety net that just removes the immediate bankruptcy risk that haunts so many other startups.
It's a complex balancing act, You're weighing current execution risk against this massive technological promise and a secured financial future, and the current market action. Well, it suggests institutional money is starting to choose the promise.
So, we leave you with the final provocative thought, which comes straight from the analysis report itself. You now have a comprehensive understanding of the entire bullish case, which rests fundamentally on that successful 2026 Gravity launch.
The ultimate question for you to consider is this. Given those $17 plus price targets and the PIF security, should you buy now at these current levels around $11 to secure your position for the long-term gravity play?
Or is it still wiser to wait?
Or is it wiser to wait, hoping the stock pulls back into the single digits one last time before you commit capital? That choice. It hinges entirely on your personal confidence in the company's ability to execute their ambitious 2026 plans successfully. That's the gamble worth contemplating.